So without further ado, good morning, guys. Happy Monday, and welcome to Monday Mortgage Live. My name is Michael Anthony St.Claire. I'm a licensed licensed mortgage professional in the real estate realm of residential. And today I want to talk about how and when it's appropriate to shop for a mortgage. I get this all the time. And let's just dive right into the when portion. The when portion really comes about when it starts with credit. I think that's probably the easiest way to attack or at least strategize how to get approved for a mortgage. And what I mean by that is if you're thinking about owning a home or owning anything that requires financing, I would sincerely hope you know where your credit is. If you have no idea what your credit score is and you don't know where to find your credit score, know this: we are not in a position to start home shopping or even mortgage shopping. The first thing you want to do is use one of these third-party tools such as Credit Karma or myfreecreditreport.com. These are wonderful tools to at least identify what's on your credit report. So if you have any type of collections, any type of derogatories that you're unaware of, or maybe you're a victim of identity theft, it happens. This is a good opportunity for you to identify what's on there. So again, we want to start with checking our credit. Credit Karma, myfreecreditreport.com. These are some great tools as well. Another item that you want to check, which you have direct access to, is your bank account. I know that sounds a little facetious when I say that and deliver that, but keep in mind that when you're looking to shop for a home, prior to even getting under contract or even actually getting to a closing, there are some out-of-pocket expenses such as escrow deposits, such as appraisals, inspections. The home is in a flood zone. These are additional premiums that are paid outside of closing. So if you're walking into or wanting to start home shopping and your bank account has a negative or it's less than $1,000, it's not the right opportunity to start shopping for a home mortgage. That's not to say that there's any type of down payment assistance programs or anything like that, but those down payment assistance programs don't take care of the upfront expenditures, such as the appraisal, the inspection, the escrow money deposit. And then lastly, the when, in my opinion, would be, are you committed to yourself and your family? Not committed to a real estate professional, not committed to a big box bank. Are you committed to yourself in making the changes for your family and for your life? I think that's really, really important. But if you lead with that commitment first before checking these two other items, such as money in the bank and credit, you could find yourself being in an overwhelmed situation and ultimately just discouraging yourself from further pursuing home ownership. Another great tip on how, now we're going to focus on how to shop for a mortgage. In my professional opinion, I feel that a real estate agent is ideal. They're incredibly valuable. One, they can cut through the muck, figuratively speaking, with any of these financial institutions that you're working with. And not to name any of these big box banks, but my point being is if your client or you as a consumer, you're not getting the attention that you need, a realtor is going to be able to help you identify the mortgage professional that's going to get you quick and fast, concise answers. At the same token, they're going to have a hand-holding experience. So real estate agents work with these different type of professionals on a day-to-day basis. So speaking with one of them first could point you in the right direction for lending purposes. Another opportunity, or at least how to shop for a mortgage, is speaking directly with a lender. Maybe you don't want to speak to a realtor, maybe you don't know anybody in particular, and you thought of maybe I'm going to go to my Wells Fargo or my Bank of America, go into one of these big box banks. These are great and they're phenomenal tools to use just to get your foot in the door. But know this, when you go directly to a retail store or a retail business, as I mentioned, Bank of America, Wells Fargo, things like that, their products are solely based on that business. In other words, Bank of America is going to offer you mortgages and programs based off of what Bank of America can offer you. There are tons of other different types of mortgage lenders. I'm a direct lender. There are mortgage brokers out there as well too, who can find the same options for you, but on a very, very much larger scale. So narrowing yourself down to just one option versus working with a direct lender, it could actually limit how many different options you have. So I recommend speaking to maybe one or two, at most three different types of financial institutions so you get a good comfort for them. They may have a phenomenal rate. They may be offering you something that's an eighth to a quarter lower than what your competitor may be offering. But at the same token, it's just an offering, it's advertisement. At the end of the day, in my 12 years, it's always come down to who can actually close your loan. And I feel that you as a first-time home buyer, a subsequent buyer, whatever your position may be as far as home ownership, you're going to want someone that can get the job done and get the job done effectively. And then lastly, as far as how to shop for a mortgage, I wanted to throw some caution to the wind as far as shopping on just pure rates. If you're trying to identify a mortgage and you're looking solely at the rates, you're going about it all wrong. I'm not saying that rates are not an important factor. They're a huge factor, but that's just one component in regards to mortgage planning and mortgage strategies. You want to look at the home as far as appreciation. If you're going to be in the home for longer than 5 years, or if you plan on reselling because it's a starter home, these are some things that you want to take into effect because the home is going to have to appreciate by at least 8% before you can make any type of return. I'll dive into that in a later video, but shopping just for rates like Zillow or bankrate.com can actually do more harm than good. The reason I say that is because some of these third-party platforms don't specify what program or product you're going for. A good example of that would be down payment assistance. Down payment assistance rates are set by the county that you're applying in. So if you're looking on a Zillow or bankrate.com and you're a first-time home buyer and you know you want to qualify for that product, you may be seeing a rate or even a payment that's misleading, and then when you get that actual rate or payment, you could be discouraged or feel that that lending institution is charging you more. So those are a couple different tips I want you guys to apply if you're in the first home buyer realm, if you're a move-up buyer. It doesn't matter what your position is, even if you're a home owner looking to refinance. These are some different components that you can use when shopping for a mortgage. Now, I want to move quickly into rates as far as this week and what's happened last week. Employment stats came out last week, which were much more positive than they were the weeks before. And what that translates to is our economy is doing better. So in layman's term, expect rates to have unfavorable pricing this week. Last week, we started to see some trends of that and rates started to tick back up, but they're going to be ticking back more up this week and going forward over the next couple weeks. The big reason for that has to do with our Federal Reserve. In 2008, they jumped in, helped bail out the entire market. That's a short snippet. They've been in it for roughly about 9 years. Now they're starting to make their exit out of the banking industry. And when that happens, investors, just the chatter of them leaving the market, investors are starting to pull their monies out of the bond market and start reallocating it into stocks. When this happens, we start to see a shift in pricing, which is a shift in interest rates. So expect to see some volatility as far as rates going up higher. If you're closing in the next 15 to 30 days and under, I highly recommend locking a rate this week to prevent any type of volatility or losing that pricing. Again, my name is Michael St.Claire. This has been your Monday Mortgage Live. I thank you guys so much for being a part of this week. I'll see you next time.